Okay, now it works better. I should turn on my microphone. Hello, everybody out there. Welcome to today's live webinar brought to you by the PrimeXBT Trading Academy. Glad to see all of you here. So we are live today here on YouTube. We are also live, hopefully, on Twitter. If things worked out technically for us there. My name is Dirk. I'm the head of trading education here at the PrimeXBT Trading Academy. I'm also a professional trader with now 24 years of experience. So I've been around the block not only once, but 2.5 times already when it comes to trading. And today we want to talk about hot charts. So if you're here for other hot stuff than charts, you have joined the wrong webinar. And before we start, a couple of things here. As you guys know, I'm very much a very hands-on guy when it comes to sharing my trading strategies. So if you've been a watcher if you have watched a couple of webinars maybe, or you've seen a couple of videos here on YouTube from the PrimeXBT Trading Academy, I really always like to share a lot of my strategies. So everything I'm showing you here is really how I also handle things. Now, important here before we start really is, if you allow me, so just one thing. So the risk disclaimer, just because I show you things how I handle the market, so real life trades, everything I show you here is how I also do it from my own portfolio, does not mean that you should blindly copy anything or everything I'm saying you. So my goal really is here to inspire you to become a better trader yourself, to make your own well-informed trading decisions. So by the end of the day, maybe in a year or 2 years down the road, you are able to write to me an email like, hey, Dirk, thank you for your services. I've developed my own trading strategy. You inspired me. And I don't need to listen to anybody out there anymore. This is really my goal. So we are offering educational content. Nonetheless, I'm going to, of course, share with you today how I approach the market. And I've hand selected 4 charts to do so. Which we are going to look at today, 2 cryptocurrencies, 1 currency pair and 1 index to be more precise. I'm going to share different strategies with you. I'm going to share why I personally think this might be a hot chart at the moment and what to expect in the upcoming days. But I'm also, of course, going to point out some dangers that might be lurking down the road. Now, before we start, allow me one more comment. I always read a lot out there that people always should start out with a demo account when it comes to trading. And I fully understand this because this comes from the logic of, why risk my hard-earned money if on something that has not yet been proven to me to be successful. And this is correct. However, throughout those 24 years that I've been doing this, I've seen so many demo millionaires out there. So people that were extremely successful on demo accounts, but then once they thought that they really nailed it and they figured out how to tackle the markets and they transitioned from the demo account to a real account, they utterly failed. And this is because there was something, and a key component missing when trading on a demo account, and this is the emotional side of things. So if you experience the euphoria of having a winning position, of really nailing the market, being 100% correct with your trading position, with entry and exit, or the depression of, when you think you have done your homework and you've entered the market, but the market goes against you, maybe even reverses at your stop loss into the direction that you originally had planned, or even something like a position that has been in profit for you and suddenly turns into loss. So these are completely different things if you do this with real money than when you do it with demo money. So in my opinion, from my experience, this whole emotional side of things makes about 50% of your trading success already. So I can only recommend you, if you want to be serious about trading, go and sign up for a trading account. And if you want to give me or us your trust, you can of course open a PrimeXBT trading account. You can become a member of a trading academy, which means you'll get some perks every now and then. You'll find a link to open this account in the description of this video if you are watching here on YouTube. And one of those perks at the moment is that PrimeXBT even offers a bonus of up to $7,000 on your deposit. So that's something very nice. Of course, that doesn't mean you should deposit all of your money and all of your savings. Start out with a little bit of money and then work your way up, of course. But it's really, really different than trading on demo. I promise you this. All right, good. I can see here some people on the chat already. So if you have any questions, feel free to ask those. If we have time throughout this webinar, I will do my very best to answer those questions, of course, as well. And very warm welcome wherever you are in the world. Maybe it's evening, maybe morning for you. And yeah, let's jump right into it. And the first chart I want to look at today is Bitcoin. And it is Bitcoin. Let me make myself a little bit smaller, the chart a little bit bigger so you can see a little bit better. So the first chart we are looking at it is Bitcoin. And Bitcoin for me is always representative of almost every cryptocurrency you find in the top 20. So in my opinion, if you have nailed down how to analyze Bitcoin and get a little bit of the feeling to where Bitcoin is heading, you pretty much have tackled 95% of the cryptocurrency markets, with some exceptions, which we are going to address later, of course, as well. And I want to show you here on this chart why I think this chart is still pretty hot at the moment. I want to give you some insights in one of the trading models that I personally use to trade actually Bitcoin. And if you have been watching our webinar about day trading strategies, this will probably look to you very, very familiar, because it's a variation of a strategy, of a day trading strategy that I was talking about on that webinar. So if you haven't watched that webinar, I highly advise, after we are done today and you still have some time to spare, maybe you go on YouTube to the videos and look for day trading strategies for beginners. That's the name of that video. So this strategy consists actually of 4 different things. The basis here is a candlestick chart of Bitcoin US dollar, a daily chart, that is, I have to say. So one candle is 1 day. In this case, then we have an RSI, relative strength index. So one of the very, very classic indicators out there that is used by a lot of people, and also, I have to say, misused by a lot of people. More on that later. So that we want to have an eye on. And then we have different moving average, which are combined also in an indicator, which you see down here, which is called Fusion MBI, which is going to give us an outlook on the strength the asset, in this case Bitcoin, has at the moment. And what we want to do here is actually quite simple. We want to wait for areas where the RSI tells us that the market is, so to say, overbought or oversold. By the way, I don't like these terms overbought and oversold very much, because for every buyer there needs to be a seller. For every seller there needs to be a buyer. So there is nothing really as overbought or oversold. So my definition always is, if the price deviates from what you would expect from a standard deviation very much, it's, so to say, overbought or oversold. And if you've been watching the day trading videos, this red dotted line and the green dotted line here were a little bit lower at 70 or 30. So we could trade more signals there. For the daily chart, I like to play it very, very conservatively with the strategies. So and there goes my Bitcoin sign. I hope it didn't shock you. And so I like to play it more conservatively. So I will only look for signals that are here, for short signals in the region of 80, or here in the region of 22, 78 and 22 to be more precise. And the rule is Actually, very, very simple. I named this system hooks for a reason, because what we are looking for is, and let me zoom in here a little bit, is that this RSI pierces with something that looks like a hook, like a check mark, through its two moving average. So I put two moving averages here over the RSI, one weighted moving average and one exponential moving average. I invite you here, this is where you come into place, to please look for yourself and try out for yourself which metrics you want to put in there for those moving averages. And when we see it pierces through here, either at this level of 22, slightly above, slightly below, or at this level of 78 or 72, and the price of Bitcoin is either for a long signal at the lower Bollinger Band, so the green line here, for a short signal at the upper Bollinger Bands, we want to go either long or we want to go short. And we hold on to the position until the top part of the Bollinger Bands is reached. We hold on to the short position until either the lower part of the Bollinger Band is reached, or we can also, as an alternative here, exit the market already when the middle band is reached. We can adjust our stop loss when the middle band is reached, and so on and so forth. And this is a strategy that only actually gives you a couple of signals a year. So you'll have years where you have like maybe just 2 or 3 signals. And this is perfectly fine, because midterm, I like to look for signals for, at least in daily charts. We're not talking about intraday trading, whole different story. As I said, watch the video for that. But I like to look for very conservative entries. So when all the stars, so to say, align. And I think this, at the moment, Bitcoin in this case, is a very, very hot chart because of 2 things. So first of all, we had this signal here where the RSI pierced through the moving averages. So we had an entry here at roughly 36,375. Actually, back when I entered the trade at 36,500. So I was a little bit slow in entering the trade. Now pay attention here. The moving averages were still in the red zone. So this means the signal was actually not confirmed yet by the moving averages. Market really slowly moved up here, up to the middle line. And I, however, decided, I thought, hey, this is really a good signal. I want to hold on to the signal. Eventually, we broke through the middle line here, and I exited my trade actually at precisely 43,000. Could have held a little bit longer onto it. So market went all the way up to 45,500, a little bit higher actually. And one thing so this was, first of all, a very, very nice trade. Entered the market at 36,500 US dollars, exit at 43,000, 15.5% with 1-to-1 leverage. I'll leave it up to you to calculate what would happen if you trade this with more leverage than 1-to-1. But I've already beaten, everything my bank or a mutual fund or any advisor out there can throw at me. I could walk away from the market already for the rest of a year and would have a performance of 15.5%, which I know is very, very hard to beat with any stocks out there, any mutual fund, or anything my bank can offer me when it comes to saving accounts. And one thing that, in my opinion, is interesting. So when we broke through the middle band here, again, this was confirmed by the RSI, and then the market started showing strength also. And it's still showing strength. So it calmed down, which you can see here by the dark green area a little bit. But today, assuming we close at around 44,100 US dollars today, it shows strength again. So the market actually could go higher. And to determine how high the market could do, we, for example, can use Fibonacci retracements. So if you don't know what Fibonacci retracements are, in a nutshell, those are magic math numbers that are based on a golden natural rule that everything in nature is designed by ratios. This goes for a leaf of a tree, this goes for a house of a snail, and this also goes for the financial market. And for me, very interesting now here at the moment is if I connect the last high here at roughly 69,000 US dollars to our last low, which was at 33,000 US dollars, you can see here how nicely, let me make it, oh, no, I moved it, hold on a second. Let me move that back, but this was not what I want. So I zoom in here a little bit. You can see how the, like this better, how the upper Bollinger Band and this Fibonacci retracement, which precisely is the 0.38 retracement, start to line up. So I wouldn't be surprised at the moment if Bitcoin continues and gets attracted to this area, roughly around 46,000 and 47,500 US dollars. And this is why I think this chart really is still hot, in my opinion. I was too impatient. I exited the trade already. I made a nice amount of money. That is a given, but anyway, it could have been. I could have been a little bit patient. So it seems, for the moment at least, that this trade is not yet over. If we'll overshoot here and then we'll get the reversal signal here at the RSI, might be a whole different story, of course. I see a question here from Elena. What period my exponential moving average and weighted moving average on the RSI, please, are? And so very happy to answer that. So my RSI here is, I mean, let's just go into it so I can show you better. So I have an RSI length here of 14 based on a close and a weighted moving average with a moving average length of 6 plus an exponential moving average on the RSI with a length of 3. So this is what you see here in the colored lines. However, this is exactly what I meant when I was talking about the risk disclaimer. This is something that works for me and doesn't mean that this works the same for your eyes. So you might want to play a little bit around with you know, with the settings there until you find something that's appealing to your eye and that you can backtest. This needs to be adjusted also to the reality of volatility every now and then. So when you have very, very strong moving markets, you need to use probably other settings on this. And this is something you find out over time. And what I mean by this is, for example, here. So we had here, let me move this up a little bit. So if I have my cross here, so like here, for example, this was a false signal. Everything aligned very well, but still the market moved more up. This was because the market was very, very strongly trending there. So this is no fire and forget strategy, obviously. Like everything in trading, you still need to use your brain a little bit and put it into context of what is going on in the world. If you, for example, and what is going on, obviously, at the moment is that we have the dangers of a war waging here in the vicinity of Europe at the moment. And what that means for technical analysis, by the way, we are going to talk about later as well. What is the indicator at the bottom? Question here from Nicholas, the red and green bars. This is a custom indicator that by a user named Fusion, I think, and it's basically just moving averages combined into one indicator. So 3 moving averages. When all 3 moving averages are pointing upwards, you will have all the bars green here. If just 2 out of 3 are moving upwards, it's going to be dark green, and so on and so forth. So you can do the same thing if you just put 3 moving averages on your chart. By the way, just experiment a little bit. I'm a very lazy person because I look at a lot of charts, obviously, every day. So I try to find something that combines this into one indicator, so I have everything in view at once. So let's move on to the second chart. And the second chart is Ethereum. And actually the picture here, and this is really what I meant also by saying that that if you figured out Bitcoin, you figured out pretty much 95% of a cryptocurrency market. So we had the same signal here, down here, also on the 23rd of January. In Ethereum, trade was a little bit harder because market moved down again, but everything apart from this looks exactly the same. And now, and sometimes you will see Ethereum developing a kind of life of its own. What you very often also see is when if Bitcoin, for example, is moving in one direction, today is one of those days, if Ethereum will do this with a leverage. So we see, for example, and you can see this up here, today we have a performance of plus 3.3% in Bitcoin, Ethereum plus 5.6%. So Ethereum very often acts like Bitcoin on steroids. If you prefer to trade Ethereum, or if you prefer to trade Bitcoin, this is really completely up to you. From my experience, it is that Ethereum likes to be a bit more erratic sometimes in the daily moves. Maybe that's due to the fact that the majority of liquidity in the market really is in Bitcoin there. So just here, to show you that what counts for Bitcoin signal-wise very often will count for Ethereum as well. Not always. I always every day have an eye on Ethereum, obviously, on the daily charts to see if there are any deviations. But it's very rare that you find like strong deviations from what Bitcoin is currently doing, apart, of course, when news are coming out. And before we move on, actually, nice question here from Mava. Is technical analysis most important in trading? I really like this question, and the clear answer to this is yes and no. I know there's no clear answer. The financial market is something very, very complex. So there are a lot of crooks and turning wheels that go into each other, that kind of influence what is going on. So if we have, for example, a scenario, a typical risk-off scenario, and I don't like to talk about this, but let's just say for whatever reason, a war breaks out tomorrow between Russia and the Ukraine. This is a scenario, a typical risk-off scenario, where you can analyze with indicators, with technical analysis as much as you want. It's not going to help you because the cards have been shoveled you. So fundamental facts out there, which can be geopolitical facts, which can be economic numbers that are released. For example, the inflation rate, the US inflation rate that came out last week with 7.5% instead of the expected 7%. Or an unemployment report, which comes out every first Friday of every month for the USA. So if those economic numbers are very much different than from what the market was expecting, then the cards will be newly shuffled, and then you should stand at the sideline if you want to concentrate solely on technical analysis. So fundamental facts will always outweigh technical facts. This is what I mean by that. And I think this maybe becomes actually more clear if we look at the next chart, which is euro dollar. And for euro dollar, I'm a classic forex trader. I spent a lot of time in my professional life trading actually forex options. So this is something I look at on a daily basis, not just cryptocurrencies, obviously. Euro dollar. So when it comes to analyzing euro dollar, you cannot, in my opinion, at least on a daily chart, rely that much on technical things. So what I like to do here is that I divide the market by zones of support and resistance. So every red line you see here is a resistance line, very easily defined by the market went up to this line or into this area of this line and didn't make it over this line, but was resisted and went down again. And you can very easily do this, by the way, for any asset out there, by just picking those horizontal lines, going from the top of your chart to the bottom of your chart for your selected time frame, and drawing in those lines. And I think this is the right approach for euro dollar to do so, because euro dollar or as a matter of fact, most currency pairs are driven a lot by fundamental facts. For example, interest rates. For example, risk off or risk on scenarios. So what you'll see very, very often is something like this. The market reversed here, and let me pick maybe a drawing tool so it becomes clearer. Market made a bottom here in euro dollar, went up pretty straight here. I don't know what the driver back then was. I'm very sure actually it was some economic data, and then it reversed again. And why is it reversing? It's not reversing in this case for currency pairs because there is some technical stuff going on. We are talking here about the biggest market in the world. So every day, around about 4.4 trillion US dollars are moved on the currency market, not the cryptocurrency market. We are talking about currency market, fiat currency markets now. So 4.4 trillion US dollars, that's the GDP of Japan daily as trading volumes. And 24% of those 4.4 trillion, by the way, are traded in euro against US dollars. And this is not driven, for example, by us retail traders. So us traders out there opening long or short positions in euro, dollar, or any other currency pair. This is driven by institutional players, such as companies that export their goods and get paid in US dollars, but need to exchange this money then back into their local currency. This is driven very, very heavily also by interest rates. And the interesting thing here, and this is why I also picked this chart today for you, is that we had this high inflation rate, higher than expected inflation rate in the USA, 7.5% instead of 7%. And now you hear those voices, and you'll see that if you scan the news a bit every day out there, expecting rate hikes. So whenever inflation is high, the appropriate answer of a central bank is to raise interest rates, which is good if you want to save some money. Usually get your more interest on your saving account. If you are somebody buying a house or you have a credit, it's going to be bad for you because the interest rates are going to be higher. But what that does on a macroeconomic level is it moves money around the world. So, for example, institutional investors such as pension funds that have the mandate to invest the money very, very conservatively, they are going to see, wow, okay, I'm sitting in Europe, but it seems like in the US, I'm probably going to get more interest for my money in the future. So I'm going to exchange my euros to US dollars, or I'm going to buy US Treasury bonds. For that, I also need to exchange my money to US dollars, which means the demand for US dollar is going to become higher. Euro US dollar is going down. So this is, by the way, called a carry trade. This is what you will very, very often see, that areas of the world that have a higher interest rates have a stronger currency than areas of the world that have lower interest rates. And at least for the moment, it seems like that the US are going to hike the interest rates faster than the Eurozone is going to do this. Thus, the demand of buying US dollars and Euro US dollar going lower is, in my opinion, probably. And so, long talk I did here, sorry. But what this means for a trade is that I was looking, or am looking also, in Euro US dollars for short opportunities. And those short opportunities, in my opinion, and this is why the chart is hot, are at the moment here at this area of 114 to 114.50. Those areas of support and resistance are no like scientific method to draw them in there. This is more art than science, obviously. It's just a rough estimate. So don't try to be too precise in pointing them. The market will always overshoot or undershoot those lines for sure. And because this offers very, very good trading opportunities, in my opinion. So what I'm looking for is, and let me quickly delete these again here, is I'm looking for short entries because I think that the interest rates in the USA will be hiked faster than in the Eurozone. And I think that this area of resistance up here seems to be a very, very good area to enter with short trades. So every time we are approaching this area here, I'm going to do a short trade. And I'm going to put my stop loss round about here. So over the last highs, I'm going to put my take profit somewhere into this area. Very nice risk reward ratio. So the amount of money I can win is much, much higher than what I have to risk. This is really trading made simple. And this is, I think, a good example also why technical analysis is, in my opinion, can only always be part of your trading decision, at least on daily charts. As I said before, we are not talking about day trading. Here is that I have a fundamental theory, and now I'm looking for a technical setup that either supports my fundamental theory or that rejects my fundamental theory. Let's see, we have more questions here. Ichimoku cloud indicator. I don't use that. I know some people that are very, very successful with the Ichimoku clouds. However, somehow I never found it very appealing to my own eyes. This is what I meant earlier also. You have to find something that makes sense to your own eyes. We all perceive the world in a different way. So we need to make sure to find something that is, appealing to our eyes. If you are successful with Ichimoku clouds, well, go for it. If this is what you're looking for, if this appeals to your eyes, this is where you should start, finding and defining your strategy then. Is the long-term trend relevant if the operation will be intraday? Short answer to this, as I said, we don't want to go too much into intraday charting today. Nonetheless, a good question there, Diego. And yes, of course. And I think a good example for this is this chart here. This is the S&P 500, so the largest American stock index with the 500 largest American publicly traded companies out there. And you can very clearly see, I earlier drew some lines of trend and support and resistance here. I mean, look at this channel here. You also intraday probably do not want to speculate against those trends. Following the trend, if you see there's a very strong upwards trend, or maybe there's a very strong downwards trend in the asset you are looking at, you always make your life very much easier if you try to pick your intraday trades into that direction. A good thing to do so for Bitcoin, by the way, is looking at the Fear and Greed Index, which is published, I think, 2 times a day. If that shows the market is in fear, it's easier to find short entries, most of the times more profitable. If it's at greed, you maybe want to look for long entries into the market. Yeah, it's true. Stop loss and take profit are very, very important. As I said before, 50% at least of the success you will have with trading is based on emotions and how you can handle those emotions. Probably another 25% goes for the stop loss and take profit. This is extremely important. It's extremely important that you pick your trades very, very wisely and you risk less money than you are able to earn. Because the beauty of that is if you risk, let's say, $100, but you can earn $150 with your trade, you have a risk reward ratio of 1.5 to 1. This means you can be correct with your trading only 42% of all the time and still not lose money. So your chances are better than a coin flip, or better than betting on red or green at the roulette table, and you'll still not lose money. If you are able to be correct 50% of the time, congratulations. Then you will, with this risk reward ratio, start earning money already. This is one of the hardest parts, apart from emotions, having this discipline for stop loss and take profit. But also once you've nailed this, you have actually really nailed 75% of trading, in my opinion. So the trading strategy itself in my opinion, really just makes up 25% of your whole trading. Most of the people out there that program EAs, trading robots, and so on and so forth probably do not like to hear this. Okay, let's move on to our last chart for today here, the S&P 500. Very, very cool chart in my opinion, because it really, really shows how the trend can be your friend. I mean, look at this here. Again, this is not a precise science where you have to, where the chart needs to obey like every time the line, but I think it's very, very clear that we were in this immense uptrend from April 2020 until just recently, where we broke the trend to the downside, 18th of January to be precise. And this for me is a very hot chart, because I stumbled upon an analysis the other day. I actually made a video about this one also, which was called the US election pattern, where a user here on TradingView by the name of Trading Shot was looking in how does the market behave after an election. So how did the market behave last time in 2016 when Donald Trump was elected for the next 455 days, and what was going on after this. And from this, he tried to predict how the market is going to behave after the election of Joe Biden, so 450 days after the election of Joe Biden, for the next until the next election. And what he found out is that after the election, 455 days after the election of Trump, the market slumped down. And this is exactly the pattern we saw also this time. It's almost eerie in my opinion. And what is interesting now is what followed. The market back then moved up a little bit. The market now, if we look at the S&P, is doing exactly the same. We moved up a little bit, up to 4,600, and then we slumped down again. And so if this continues to be correct, we should see one more move up to the all-time high here at around 4,800 points, which is this area of resistance, until the market goes down to 4,000 points, maybe even lower. So maybe it's even going to hit those yellow and red moving averages. So the 200 weeks moving average and the 1 month moving, the 100 months or 1 month moving average, sorry. So very, very interesting. This is playing out great at the moment. That's why it's for me a chart that's sort. So what I, for example, would do is here, I would patiently wait and see if the market really goes into this zone up here again. I probably would try to play a short trade, because I have a chance then that I can play it all the way down here to 4,000 points, and I can comfortably, very, very comfortably have my stop loss here a little bit above what our last all-time high at 4,800 points was in the S&P 500. So this is super nice trades, mathematically speaking, from a risk reward ratio. If it doesn't play out, well, okay, then it doesn't play out. But still, this is the type of trade I would do every day, where I just need to risk something like 200 points and have a chance of earning 1,000 points. This is a great trade. So really nice, great work here done by this user Trading Shot. Can only highly recommend maybe looking at the work we are doing. If, by the way, and this is again now where all those little turning wheels start, grabbing into each other. If this really should become reality, that we see the market moving down, the S&P 500 moving down to 4,000 points, you would probably see the same for Bitcoin and Ethereum as well, because the cryptocurrency markets and the stock markets are very, very closely related. So in this case, this plays out, we would see something like Bitcoin going maybe to 50 to 56, maybe even 60,000, until falling all the way down to 30 or 20,000 US dollars. And one catalyst that this actually could become true is this, the war lingering around there between Russia and Ukraine. If this really takes place, what most likely will happen, and of course, pardon me that I cannot be super precise on this, because I luckily have never experienced a war, at least one that is rather close to my doorstep before my lifetime. But usually this would be a risk-off scenario for the market. So you would expect the stocks going down quite severely, at least in the beginning. You would expect euro-dollar going down because investors are looking for safe haven investments. And this means normally investments that are based in US dollar, for example, gold, treasury bonds in the USA. So, and this is what I meant also in the beginning of this webinar when I say, like, this is an area where I can do all the technical analysis in the world, where I can, be the best technical analysis in the world, and still the fundamental facts out there, for example, a war, are going to completely change the picture, completely reshuffle the cards. And the best thing really to do then usually is stand at the sideline, wait until the market has cooled down a little bit again, and then start from scratch again. That's why it's so important to have a stop loss, because events like this somehow tend to take place when we are not paying attention to the market. For example, if we are lying in our bed and sleeping there. All right, so already more than half an hour that we've been talking here, and Diego is asking the question: if a conflict starts in the Ukraine, do you think it would be good to continue operating or better wait a bit? Honestly speaking, probably it's better to wait a little bit in the situation like this, because you just don't know how things are going to progress, and you want to wait until you have a clearer picture of a market again. If you are doubting a trading position, it's better to not do the trade. You want to be at least almost 100% sure about the trade. That doesn't mean it's going to be a successful trade, but it means that you go home after you place the trade knowing, I've done my homework, I've done everything in my power, so to say, to analyze the trade. Right? If it still goes wrong, well, okay, then the market thought in another way than you did at this precise moment. If you are interested to learn more about all of these things and little turning wheels that are going on the market, I highly recommend that you open an account. As I said, the description you'll find in the link for opening a Trading Academy account for free, of course. That is, you'll find in the description of this video. That also means you will once a week get our market research report here, which is very, very good in summarizing always, not just for cryptocurrencies, also, of course, for other assets out there, what is really going on. So this is really a great source once a week to get an overview of what is going on in the market. Will save you a lot of time of doing research yourself. So alone for that, it's, in my opinion, very worthwhile to already sign up for account. All right, so this is it already for today. Thank you for your attention here. If you liked what you were seeing, why not leave us a like, subscribe to our YouTube channel so we can continue to offer you free stuff like this. And also remember to follow us on Twitter under PX_Academy. If you have any questions, if you, for example, say, hey, I have this asset here that I'm trading, which I would like an opinion on a live webinar for, or maybe in an email, don't be shy. Get in touch with us. Write us an email to academy@primexbt.com. I'll promise you every single email is answered by me personally, and there are no dumb questions out there. We all started trading, and if I can save you some time, give you some advice, it really makes my day. It makes me very, very happy. Of course, later this week, you will also find this video again on YouTube uploaded. So if some of the stuff maybe was too fast for you, you can skip the boring parts and fast forward to the things that were interesting for you. I'm going to see you very soon again. Watch out for next week, where we will have our great cryptocurrency forecast for 2022 in a live webinar. Happy if you want to join again. Until then, stay safe and remember to always use the stop loss. Bye-bye.